Mike Novogratz, CEO of Galaxy Digital, has long been a key figure in the crypto space, known for his insights on how Wall Street and institutional investors approach digital assets like Bitcoin. Recently, he dropped a major revelation on CNBC that has ripple effects, not only for crypto investors, but for global economic markets at large. His comments revolve around several key points: what the Federal Reserve is doing with interest rates, how China's economic moves impact global markets, and how both the United States and China are affecting Bitcoin's future. The timing of this bombshell couldn't be more critical, as we see increasing uncertainty in the global economy. What made Novogratz's statement stand out is the context in which it was delivered. Right now, the United States Federal Reserve is at a crossroads, managing inflationary concerns while also trying to sustain economic growth. In parallel, China is taking aggressive steps to manage its liquidity, a move that's as consequential for the global financial system as it is for crypto markets. For investors, these developments raise the important question: how will Bitcoin, often viewed as a hedge against traditional financial systems, respond to these seismic changes? Novogratz's insights provide a window into the future. The Federal Reserve has been central to much of the recent economic discourse, especially with its ongoing adjustments to interest rates. As inflation persists and economic growth appears fragile, the Fed has signaled that it will likely continue lowering rates. However, the pace and magnitude of these cuts are up for debate. According to Novogratz, the Federal Reserve will likely reduce rates steadily, but not recklessly. He pointed out that Fed Chair Jerome Powell made it clear in recent statements that the central bank's approach will be measured and data-driven. Novogratz explains that Powell's reluctance to act too quickly is rooted in the desire to avoid market disruptions, but even small rate cuts can have significant ripple effects. For Bitcoin, this matters because lower interest rates generally increase liquidity in the economy, pushing investors to look for alternative assets like cryptocurrencies that promise higher returns. Bitcoin, often touted as digital gold, could see significant price movements as traditional asset yields decline. The Federal Reserve's decisions are not just about managing the United States economy. They also set the tone for global financial markets. But Novogratz highlighted something even more significant than the Fed's actions: China's recent moves. While the United States is cutting rates, China is also injecting liquidity into its financial system. The combined effect of the two largest economies in the world both cutting rates at the same time cannot be overstated. For crypto, this could trigger a flight to assets like Bitcoin, which are seen as safe havens in times of monetary expansion. One of the most striking elements of Novogratz's discussion was his focus on the potential regulatory clarity that could come from the next US presidential administration. Former President Donald Trump has been vocal about his support for crypto, and his promises, if fulfilled, could fundamentally change the regulatory landscape in favor of digital assets. Novogratz emphasizes that Trump's stance could be a game changer, as regulatory uncertainty has been one of the biggest hurdles for institutional adoption of cryptocurrencies. Trump has stated that his goal is to make the United States the crypto capital of the planet. This kind of rhetoric isn't just political posturing, it's a strategic move to position the US as a leader in a rapidly growing global industry. If the US can establish clear, favorable regulations for cryptocurrencies, it could attract massive investment and innovation within the space. For Bitcoin and other digital assets, this would be a huge win, as the lack of regulatory clarity has kept many traditional financial institutions on the sidelines. The idea of the US becoming a Bitcoin superpower may sound bold, but it's not far-fetched. Many countries are already competing to attract blockchain talent and investment, with nations like Switzerland and Singapore taking the lead. If Trump were to win the presidency again and follow through on his promises, the US could very well position itself as the global hub for crypto innovation, providing a competitive advantage in what many believe will be one of the most important technologies of the future. While Trump's promises on crypto have garnered a lot of attention, Novogratz also touched on the potential policies of Vice President Kamala Harris, who could succeed President Biden. Interestingly, Novogratz suggested that Harris might be better for crypto than Biden, largely because she could usher in a new era of leadership with fresh perspectives. He pointed out that Harris's administration would likely differ from Biden's second term, with different personnel and a possible shift away from the more anti-crypto stance associated with figures like Elizabeth Warren. Novogratz mentioned that Harris might be more open to crypto-friendly regulations, distancing herself from the faction of the Democratic Party that has been more critical of digital assets. He observed that the Warren faction, in particular, has pushed back against the growth of crypto, viewing it as a threat to traditional financial systems. However, as blockchain technology becomes more integral to industries beyond finance, many Democrats are beginning to see the potential benefits of supporting innovation in this area. If Harris were to adopt a more progressive stance on crypto, it could lead to significant advancements in regulatory clarity and institutional adoption. Novogratz suggested that Democrats in general are starting to realize that opposing blockchain technology is not a wise long-term strategy. With technologies like artificial intelligence and robotics dominating discussions about the future, blockchain is emerging as another critical technology that will shape the next generation of innovation. Therefore, it's crucial for any incoming administration, whether Democratic or Republican, to embrace the crypto space rather than hinder its growth. One of the most significant developments in the political landscape surrounding crypto is the increasing support from certain Democratic leaders. Ro Khanna, a Democratic congressman from California, has emerged as a key proponent of crypto, advocating for the establishment of a Bitcoin strategic reserve in the US. This proposal is a testament to how seriously some politicians are taking the potential of digital assets to transform the financial system. Khanna's plan would position Bitcoin as a reserve asset, similar to gold, which could enhance its legitimacy and solidify its role within the US financial system. Khanna's proposal is especially important given the backdrop of global economic uncertainty. As the US continues to grapple with inflation and a slowing economy, Bitcoin's potential as a hedge against traditional monetary policies becomes more appealing. By establishing a Bitcoin reserve, the US could not only stabilize its own financial system, but also set the standard for other countries to follow. This kind of forward-thinking policy could pave the way for broader adoption of Bitcoin at the national level. Novogratz noted that this growing support from Democrats is a positive sign for the future of crypto. While Republicans have traditionally been more vocal in their support of digital assets, the bipartisan nature of the current discourse suggests that crypto regulation could see significant progress, regardless of which party holds power after the next election. This is crucial for the long-term success of the crypto industry, as regulatory clarity is often cited as one of the biggest barriers to institutional investment. As Novogratz discussed, one of the biggest challenges facing the crypto industry is the lack of clear regulations. Washington, D.C. has been slow to act on passing meaningful legislation that would provide the regulatory clarity necessary for companies to innovate without fear of legal repercussions. Novogratz outlined 3 key pieces of legislation that are needed to move the industry forward: a market infrastructure bill, a stablecoin bill, and guidance from the Office of the Comptroller of the Currency, OCC, that would allow traditional financial institutions to hold crypto on their balance sheets. The market infrastructure bill is essential because it would provide clear rules for how digital assets are traded and managed, giving companies the confidence to build applications on blockchain technology without the fear of regulatory crackdowns. Currently, many companies are hesitant to fully embrace crypto because they are unsure whether issuing tokens or building decentralized applications or dApps could result in legal consequences. With clear regulations, innovation would likely accelerate, and the US could become a global leader in blockchain technology. The stablecoin bill is equally important because stablecoins play a critical role in the crypto ecosystem, providing a bridge between traditional finance and digital assets. Stablecoins like USDC and Tether are pegged to the value of a traditional currency, such as the US dollar, and are used by investors to move in and out of crypto markets more easily. Regulating stablecoins would help ensure their stability and security, making them more attractive to both retail and institutional investors. Finally, guidance from the OCC is necessary to allow traditional financial institutions to hold crypto assets on their balance sheets. This would be a major step toward mainstream adoption of digital assets, as it would give traditional banks and investment firms the green light to integrate crypto into their portfolios. With these 3 legislative moves, Novogratz believes the crypto industry would see rapid growth and innovation. The introduction of spot ETFs, or exchange-traded funds, for Bitcoin and other cryptocurrencies has been one of the most significant developments in the crypto space in recent years. Novogratz noted that Bitwise, a major asset manager, recently filed for a spot XRP ETF with the SEC, which, if approved, could have a significant impact on the market. ETFs provide a more accessible way for retail investors to gain exposure to Bitcoin and other cryptocurrencies without having to directly purchase the underlying assets. While the initial excitement around crypto ETFs has cooled somewhat, Novogratz emphasized that the long-term outlook remains positive. He explained that adoption is happening more slowly than expected, but progress is still being made. Many platforms are just beginning to offer ETFs, and over time, this could bring a new wave of investors into the market. One of the key milestones Novogratz mentioned was the introduction of options trading on crypto ETFs. This would allow investors to use leverage, potentially leading to even greater market participation. He compared this potential future development to the popularity of MicroStrategy, a company that offers indirect exposure to Bitcoin. MicroStrategy has become a favorite among retail investors because it allows them to gain leverage on Bitcoin's price movements. The introduction of options on crypto ETFs could provide similar opportunities for investors looking to maximize their returns. In his final thoughts, Novogratz emphasized that the crypto industry is in the midst of a major transformation. He encouraged viewers to take their crypto journey seriously, as the market is evolving rapidly, and those who are informed will be best positioned to take advantage of the opportunities ahead. The combination of regulatory clarity, growing political support, and the introduction of new investment vehicles like ETFs and stablecoins is setting the stage for a new era in crypto. For those who have been following the space for years, Novogratz's message is clear. Now is the time to double down on your investment in crypto. The industry is moving in one direction, up, and those who are prepared will reap the rewards. As the crypto market continues to mature, more and more opportunities will arise for both retail and institutional investors. Whether through Bitcoin, Ethereum, or other blockchain technologies, the future is bright for those willing to embrace the revolution.